Good morning, everyone. Today is Saturday, February 14th, and today is RODY time, zikot time, wheel time, options time, where we go over how the various strategies did for the week. How much money I made trading options, how I trade options, and what I was thinking, this, that, and the other thing. And hopefully maybe you'll learn a thing or two along the way, or at least have fun and are entertained. And I'm already losing my voice, so this is a great start to the video. Let me take a sip of water. All right, let me sing. Ha la 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 la. There you go. I'm good. All right, so here we got something good going on right here. I don't know if you see it, but we hitting 70K. I know. I'm gonna jinx it, but it's pretty good looking chart right now. It's a 24-hour, of course, but yeah, something happened. Right, 6 a.m. we're sitting around 69, then boom, 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 boom. Someone bought, maybe it was brother, maybe it was LA. We know it was a whale in the house. So someone bought the Bitcoin, and the Bitcoin went up. So, but don't worry, someone will sell and we'll be back down. All right. Sorry to be a buzzkill. All right. Anyway, let's get to the fun. We're going to go right to the spreadsheet, and we're going to have some fun. If you're new to the channel, if you're new to RODY, if you're new to zikot, you're new to this whole thing, think of it just like it's just an options type video. It's once a week, every Saturday. We just go over how we did, right? But what are we doing? It's several things, but basically in the end, we find different ways to sell weekly options. We're the sellers. We want income, all right? Because we got bills to pay. We got to bring in the money, right? Because sometimes that work paycheck, that ain't enough, or we're just greedy and we want more money, right? We want that bankroll. So there's one way to do it, like the wheel strategy. Simply put, you sell puts, you get a sign, you sell calls, and you repeat yourself over and over. All right. And then, or you could do the RODY, which is basically, it's a version of the poor man's covered call. However, you make it a little cheaper, right? Because you sell a put with it, you make a synthetic combo, and then you add a little collar action here by buying a put with some downside protection. But yeah, I'm not going to dive too deep into that, but it's a three-legged monster with a long dated expiration that you're setting up. And then what do? You sell calls on that buy call, that long call. And then you make money, hopefully, every single week, over and over and over. All right. Let's and then the zikot, last but not least, the zikot, which the good thing about the zikot is it doesn't have the downside. Like once you buy that call, because we're not selling a put, we're just buying calls. On this, we're selling puts. So there is a downside of the, the credit spread here, but here there's no put action. So whatever, your loss is really just how much you spent on the call. But on this, you buy two calls, you sell one call, and then you can play with one other, on a weekly basis. So, all right, let's move on. Sorry to bore the people who already know that, but let's get to it. Let's say some good mornings, because it is, after all, our video. I'm going to scroll right back to the beginning. Alan Wynn was first. He is the winner. He has some coffee, hopefully, as do I. So I'll take a sip with you. Cheers. Wow. All right. We're awake now. Wolf, good morning. We were just talking about Wolf last night. The best one. Well, I don't want to offend anyone, but one of the best subscribers out there. He's always loyal and attending the various high yield YouTubers. And Double D, we were just saying, how does this guy not have 1,000 subs, bros? Like, what are you guys doing? Go to his channel, give him a sub, give him a like, give him a comment, give him a share. You know the drill. Come on, get with it. All right, who else is here? Brother AB, thank you for being here. Good morning. Good morning. All right. Scrolling through. LA's here. That's good to see. Most consistent man on YouTube. Yes, he's defeated me. I am no longer the consistency champion. He has defeated me. I don't think he's missed a video ever. So he beat me. I admit it. It's over. Uncle. All right. So Tesla Group. Yeah, she said she was going to be. I don't see her commenting though. You know, she lying. Let's see. Good morning. What we got here? Who is this? Dieter Gantz? Rod, you deserve special kudos for that incredibly in-depth info regarding Granite shares protective puts on the ETF. Part of a fund showing how the majority of them declined, yes, but not as much as. Wow. Thank you for that comment. I'm glad you enjoyed the video. How heck had coffee working on my set? Yeah, I'm on my second cup too, but I'm gonna be honest, I woke up late, so this is kind of a struggle bus here. 3:37 a.m. in San Diego. Wow. Good. Thank you for being here, Mr. Sean. All right. The underlying fund, I was pulling my hair out over these funds, especially TSYY. Yeah, no problem, bro. Good morning. I am here. Oh, this is you? Am I supposed to believe that? Fake news here. I don't know. What we got? Tesla groupie scammer. All right, caveman reminder today. Oh yeah. I'm the worst. I know. I do need that reminder. All right, let's get to it. All right. So anyway, we explained what the strategies are. I'm not going to go through the definitions tab. I'm going to kind of skip through the rules because even though I have rules, I never listen to them. So, let's not be a hypocrite here. But one thing I always try to stop at is the chart because I feel like, I'm a half-ass charter. But, as we talk about this each week, I'm going to try to always pull up the Qs and pull up their 6-month and 1-year chart. All right. Get some idea of how how this works. So again, up here, I have the 200 EMA to 200 EMA, right? Exponential moving average, whatever they say, right? So if you look at it, it helps filter out short-term market noise to show the broader market direction. Okay, so it's up. This is the 6-month and it's up. Okay, so that's good, right? And what about the 100? The 100-day primary function is determine if the market is an overall uptrend, bullish, being up, or downtrend, bearish. So, by the way, the price is at 602, which is right here. So the price is above the 200-day on the Qs, but below the 100-day, right? So they're saying basically it's in a bearish trend. The bears are winning the battle. So, this is where I get confused. Okay, we're above the 200, but we're below the 100. So it's like they're saying, all right, should we sell? Is it a buying opportunity? Like, who the hell knows? And then we got this other one, this yellow one. This is the 50-day. Stocks trading above the 50 SMA are generally in an uptrend, while a price below is typically in a downtrend. So we're below the 50, we're below the 100, we're above the 200. Okay, whatever, right? And that's it. I have the 20 too, but that 20 and the 9. But yeah, forget about that. All right, and then let's go. So let's look at the 1 year now. So on the 1 year, we're above the 200. We're below the 100 and we're below the 50. So same thing on the 1 year. All right. So again, I guess we're in a bearish trend, maybe, but I don't know, man. I needed my average is 615. So I needed like right above that. But again, just some education here. I do have the Bollinger Bands, but again, I got too much going on. I'm not going through the Bollinger Bands, but anyway, that was just some quick charting. I got my watch list. So basically, I'm saying these are the suckers that I'm going to trade. SoFi, yeah, I'm long on SoFi. They got destroyed this week, unfortunately. Yeah, it was another rough week. Honestly, it was bad. I don't know what's going on, but it is not pretty. Elf had a fairly good week. It's my only, like, it's doing well. And I can't complain. It's why they're still on the watch list. It's like, you know, what do I know about Elf Beauty? Nothing. I just know they're cheap. I know Tesla Groupie loves all the Elf products. She goes to Walmart every day and buys all of her Elf products. But, and no, I don't know, you know, I just know it's cheap and people buy it. So, and it's doing rather well. And it's also still pretty low considering it was at the 125 range not that long ago. No, IWM, SPY, and Qs, obviously the three major indexes. And yeah, this is the long-term plan. The RODY is going to trade on at least IWM and the Qs because these are safe. They don't move as much. So, and that's what I want. I don't need this upward, downward, crazy movement. I don't need that in my life. I have gold and silver here only because of how good they've been doing. But honestly, I don't even know if I trust them. They move so rapidly. It's insane. But they're there just in case I feel rather crazy. All right. All right. So let's get to the numbers here. See if you guys have any questions. If you have any questions, let me know in the comments, and we'll go from there. Let's see. All right. Open. Oh, Open. I hate you. Let's pull up stock market analysis. Let's look at the 1 week. I guess I got to put the view up here so you guys can see, you blind bastards. Do you see the chart? Here's the 1 week, 5-day. Yeah, it was a rough week. ELF went down. I mean, not ELF. Oh my God. Open went down 8.91%. It was already down. Like, it's already bad. It's already ugly. So it's not been good. So I had to kind of, you know, I'm changing up my strategy on some of these. Open, I have 10 contracts, right? 10 contracts on Open because Open's cheap. I can afford 10 contracts. But at the same time, it's annoying because it costs money per commission. You know, there's commission per contract per, you know, that you're trading. So there's good and there's bad. But the good news is since I have so many contracts, I can play around a little bit. Since we're on the down, right? We're down so damn much compared to the average. My average cost basis is 7. So ideally, I don't want to sell calls below 7. I'm selling calls that expire no longer weekly. I'm going out to March 20th. I'm going out to March 27th. I was going to go out another week from here, but it wasn't even on the chart yet. So it was either that or choose May. So I had to choose another March. All right, another March 27th. So I have 3 calls of the 10 going at $7 strike. And so, yeah, it's, you know, it's making money. It's better than nothing. I'm hoping Open, maybe if it jumps up, great. Then I'll sell another call next week. But I'm trying to keep up with my weekly goal of at least making $13.50, which will pay off the original investment. You know, and then hopefully after that, I can make some money on top, which will balance out whatever happens in the end. Because again, the RODY, you know, it's a synthetic transaction, so it has an expiration. We expire November of this year. So hopefully the hoping is that Open will be above $7. And then even we'll make a little money on top, you know, with the synthetic. Right now, it's not looking that way. It's not looking pretty. So what are you going to do? But for now, I can't worry about that. Again, we made a decision. We went long. We're hoping for the best. But while we wait, we're making some premium. So we made how much? We made $37. We did 2 trades, $37. Total we're risking on this whole thing is $3,830. That's still a 50% annualized yield. So not bad. Better than nothing. Better than sitting on our ass doing nothing, crying the blues. So if we look at Open again, my original expense for this was $1,830. That's for the 3-legged monster we spoke of, or the 3-legged cricket. But right now it is worth negative, actually. If we closed out the position, we would lose we would lose $595. So we would not make money. We would lose money. But there's no reason. Getting rid of this freaking dog. Hold on a second. All right, back to business here. But so yeah, it's down. It's down a lot. So obviously our long call is only worth 94 cents. Yeah, nobody wants it. That's why it's only worth 94 cents. Our sell put, yeah, we're gonna have to pay more money to close it because it's looking like you can get assigned. And then you got the downside protection, thankfully, because we're now below the $5 strike. So that's boosting us up a little, offsetting the damage on the sell put. But in the end, it would cost us $5.95 to close out the position, which we're not going to close, right? We're not going to close because we got till November, and we're, you know, I'm not going to say I guess we are bullish, right? Open does have earnings coming up. Interest rates should be cut. Good things should happen, hopefully. If not, then we lose money and we made a bad decision. Whoopie freaking do. It happens. All right, so let's move on. SoFi, I hate you too. You know, it's like, come on, bro. I do have a question here from Wolf. What's up, Wolf? Why don't you trade on QQQ, TNA now, since you used to do TNA when you did the wheel? Well, yeah. I mean, you got to think about the way I'm trading now, like the RODY. It's a leverage play, really. So if I trade TQQQ or TNA using the RODY strategy, it's really leverage on leverage, which, you know, that's great and all. But it kind of, the part I don't like is, since, you know, I'm actually trading a leverage ETF, a triple leverage ETF, I do have to choose a shorter expiration date typically, because again, there is decay on the daily rebalancing on those funds. So I'd have to go, like, say 3 months out at most. But so the reason I trade just the Qs in general, you know, I can pick a year out, a year and a couple months out, and feel good about it, and, you know, let it be. And then I could just focus on my weekly calls. All right. If I'm going to trade the TQQQ, or if I'm going to trade TNA, I'm going to do it via the wheel strategy. I don't want to do those on the RODY. And as you can see, I am doing the wheel strategy again, but right now I'm only doing TSLL because I have too much going on. And I can't manage it. I really can't manage too many other positions. I'm already over, you know, it's already too much. But yeah, I love doing the wheel on those tickers. 100%. All right. The dog wants a treat. Yeah, the dog got a treat. But yeah. It's okay for something to be outside your risk profile. Sometimes the reward. Yep, that's for sure. That is for damn sure. You saw what happened on Hood. I lost a lot of money. All right. Thank you all for being here, by the way. If I didn't say it enough, we are live on YouTube and X. So if you're on X, you're allowed to comment too. I could pull up your comments or your questions. There is a live chat down there. I know everyone's half asleep still, like me, but all right. So let's get to SoFi. So we have two different positions on the SoFi. One that expires in May, and that's coming up. That's 3 months away. So we got to get moved. We got to start moving. We got to get moving here. But whatever. Our cost basis on this position, if I look, is $28. All right. That's not good. That's awful, actually. But who would have thought SoFi, like, look at this week, it went down like another 6%. Like, what the heck is going on? But it is what it is. You know, we can't control what happens in the short term. We're at $19. We're now below $20. But like I said, I'm not waiting around crying. I'm still, SoFi is one of those stocks. It was doing well. It was like the best of the bunch. But obviously, you know, we hit a little hiccup, a little bump on the road. Since my cost basis is 28, I have two choices. Well, I have three choices. First choice, I do nothing, which is not an option for me. Second choice, I sell calls below my strike price on a weekly or whatever, or I sell calls at my strike or above with a longer dated expiration. So I go out further than a week, and that's what I chose to do. So I now have expirations, as you can see, March 6, March 13, March 20. This week I added March 20 and March 27. So now I'm going 39, 45 days out. But it is what it is, all right? I generated $22 and $32 in premium. And guess what? If it recovers, it goes through, it blows through my strikes, good. I welcome that. However, it's 28% out of the money. It's 30% out of the money. But again, during over a longer period of time. So it is possible that it could happen because look at the deltas. The deltas, you know, they're not zero, but they're 0.11, 0.14. Again, rather safe. But again, I'm more than happy to sell calls at my strike, regardless, at my cost basis. But whatever. You can see I am at house money for SoFi. However, the next goal is to make, if I make 107.80 per week, I can pay off whatever the downside is, the maximum downside exposure. All right. So yeah, what do you do? Am I going to make 107.80 a week? No, I'm not. I'm not. So I really need SoFi to recover in order for this overall trade to be, profitable, we'll say. But we'll see how it ends up. Again, this is all new to me too. All right. Anyway, I made 54 bucks this week. I'm shelling it out. I'm risking 4,304 on this SoFi position. So all in all, that is a 65% annualized yield. All right. Sound good, but good enough for me. All right. And then, here's the SoFi holdings. So basically, as you would imagine, it's a disaster. If I close out the position, I would lose 1,511 max loss. If all things go south, I'll lose $2,100. But this one, I'm not giving up on. Hood, I give up on because Hood moves with freaking Bitcoin, and I don't need that. I don't want that exposure. SoFi, as far as I know, they're not doing that. They're moving with the other banks, the interest rate crap, and this and the overall market. So we'll hope that hopefully, they have recovered. I mean, they shouldn't be down here. They shouldn't. This is cheap, man. But again, as you see, the market's been nuts, and who the hell knows what's going on. But anyway, as SoFi went down, I made a move, and I said, you know what? Because I did open a new RODY SoFi, because I said SoFi is here to stay. I'm going to extend my position. All right. Whatever happens on that other SoFi position, hopefully it's good. But for now, I'm going to build out a new one. And I started at 25. It went down. I added a 23. It went down again. And then I added a 20. So, the trend is clear. The timing of my opening positions on single stocks is horrible. All right. My timing is horrible. Entry's horrible. But it is what it is. So I added another one this week for 20, lowering my cost basis to $22.67. So now at least I can sell calls at 23 or above. I had since I have 3 contracts, I could sell calls obviously on 3 contracts. I have one expiring next week that I opened this week, $24 strike. I made 16 bucks. And then I put one out till March 6th. Again, the premium on the options chain on SoFi, it's been sucking. It's been sucking really bad. I'm not going to lie. So I'm squeezing out pennies here, but hey, I got to get what I got to get here. And I made another 20. So I made 36 bucks for the week on SoFi. So if I look here, 36 bucks for risking 3. Let me make sure I have all 3. Yeah. Okay. 3,609. That is a 51% annualized yield. And if I scroll over here, if I look at the weekly goal, you could see, all right, I need to make $16.54 per week throughout the period of the synthetic expiration. Obviously, I'm doing that, right? I made 36 bucks, so that's good. But of course, there's always the downside. There is some downside risk, which obviously we have to consider. All right, as far as the holdings go, man, it's actually, interestingly enough, and I'm going to check on my phone real quick while we're talking here, because I did not know this. You learn something new every day. All right, let me check my SoFi. I have a lot of freaking SoFi. So see this here in orange, buy put. It was on the top 3 legs, and then here sell put 20, same expiration. It's gone. It's like when I opened this 3-legged monster and I sold this put, it sold that put to close. right? So, yeah, man, I don't know. Not sure what happened. But either way, I guess technically they would offset each other anyway. So what the hell's the difference, right? But when I go to my actual holdings, it's not there. There is no buy put for 20. There is no sell put for 20. So when I sold the put for 20, it closed. It did like a sell to close on the buy put. I don't know if you guys ever dealt with that, but that was new to me since I didn't actually select sell put to close, right? But whatever, like I said, they offset to zero anyway, so does it really matter? I guess not. But yeah. And yeah, the value of the position, though, it's actually still worth money, which is good, but it's a newer position and it's longer dated, so there's a lot of time value left. All right, so moving along, we're now getting to ELF. ELF started out as my worst position, and then I doubled down on it after the earnings disaster, the first earnings, not this latest one, the one before that, and it's been fantastic since. So you can see the other expired already. It's gone. So we're working on this new one. This expires in May. All right. A May expiration. $75 strike. So only one contract, unfortunately, $75 cost basis. All right. So what happened this week? So I had a, this was a buy to close. Why is that still in range? All right. I got to hide this stuff. Any questions, let me know. If not, drink your coffee, enjoy the show, right? All right, what do we got here? We got Alan. Alan says, SoFi is freaking annoying, more annoyed with the premium or lack thereof. Yeah, it's this. Well, you got the price going down, you got the premium stinking up the joint. It's just, things are not helping out for us. Wolf says, I used to write options on SoFi at $10. Wow. Damn, brah. Hopefully it doesn't retrace. All right. Yeah. Let's not think that way. Then we'd be crying. Then I'll be bitching next time that happens. The client base of Robinhood and SoFi share a theme, the speculative nature of crypto, not a conventional store of value. Expect bigger swings. Yeah. Crypto, speaking of crypto, let's see if we're still above 70. Yeah, man. Yeah, it's holding strong. Yeah, I didn't jinx nothing. All right, anyway. So I had a call this week, right? It was expiring on the 13th. Wait, did I have? No, that's why. Yeah, I have to unhide that. Hold on, I screwed up. Yeah, no, this one I want visible. All right. This is all the history, by the way, of all the prior trades. All right. So what happened is I had a covered call on ELF. It was at $86. One of the days, ELF, man, it tanked. I'm like, what? That's BS. So what I did is I just did a buy to close because it was so damn cheap, right? I collected $140 in premium. It only cost me $14 to close it. And I closed it on the 9th. It was early in the week. So I'm like, you know what? Let me close it. And then if it recovers the next day, I'll sell another call. If it keeps going down, so be it, So I did the buy to close. And lucky enough, it did recover. It didn't recover fully, but it went up the next day. So what I did is I sold a covered call. So I got 2 weeklies in the same week, right? I was able to use the same contract to sell calls within the same expiration. So this time I chose a little lower. I took a risk, $84, which was 7.57% out of the money at the time, 0.14 delta. So I took that risk. I got another $40, right? So basically I paid 14 to close the old one, but I got 40 to get the new one. So for being active, I basically made an additional $26, right? And of course, yeah, it wasn't assigned. Because we closed on Friday, we closed at like 81.50. So obviously it was below the 84. So what I did, anyway, I did a rolling order as I usually do. I decided to keep that 84. That seems to be like the range right now. I'm not, too worried it's going to blow through it, but if it does, we'll deal with it. It's 3.93% out of the money. The delta on that was 0.34. So obviously a little riskier now, a little more likely to get a sign because ELF did recover. But I got another $130. So within this week, with the 40 and the 130, again, I don't count the 14 that we paid. I just put that in the old bucket just to keep things simple. But that's why you're not seeing it netted. But I made $170 this week on ELF. ELF is doing great. I'm seriously about to create a new ELF position if they drop. I know it's stupid because I keep saying I'm staying away from single stocks, but I want to be in the ones that have done well. But you know, maybe just one contract, all right, just because it's fun. Again, I'm going to have fun on one of them, and at least ELF has been fun to me. These other ones, man, they are treating me like garbage. They are dropping. They are tankity-doo-dah on me. They are not being nice. But anyway, I made $170. I'm risking 2,028 at the moment, so that annualized yield is ridiculous at 435%. How much do I need to make? Where's the weekly? There it is. Weekly goal. Now, don't forget, guys, this is also paying off the damage from the old 125 where I kind of lost my shirt. So I need $78. All right. And I made that. I made 170. So we'll see how it goes in the end. So when you look at ELF Holdings, again, my synthetic, I bought it at, you know, basically at the money. It was at a $75 strike. You could see it's at 81.50 at the moment. So yeah, my call is worth more than how much I paid when I purchased it. So right now, if I close the three-legged monster, it would, you know, it would pay out a profit. So I'm in a profit of $371. However, I'm not doing that, right? I'm going to keep playing this game until the expiration probably or close to it. And we'll see how it goes. Okay. So that was ELF. Oh, yeah. Let's look at the 1 week on ELF. I think it was pretty sure it was green in the end. Let's see. No, it was red in the end. It was full. It was flat basically in the end. See? This thing was nuts. All right. So now Palantir is next. I don't know what to say about Palantir, man. It's been sucking. Why is that not working? There you go, buddy. Palantir, they went down 3.3%. And we were already down on Palantir, so this was not helpful. Let's see. We got a comment here. Marcus Trader. Is the wheel still a good? Yes. Hell yes. Yeah. Hell yeah. No, the wheel's great. The wheel is great. I'm just, again, I had to take a little break from the wheel because I'm trying to learn different strategies via options, whether good or bad. It is what it is, but I'm just trying to learn different stuff. But yeah, I do have a little wheel coverage that I'll do. Actually, I forgot to pull the file up, but I do have a wheel. A wheelie. Here you go. Here's the wheelie. There's the wheelie, but we'll get to that. Anyway, let's do the Palantir synthetic. Oh yeah, sorry. Let me go through the comments. Good morning, CG Bajake. Question: when I create a benchmark to compare against, the example of risking 4K in a synthetic versus what buying and holding the index during the same time would be, comparing trading to invest. Well, because that's more work. That's the problem. I think someone else asked me that the other day. Let's do a side by side. I'm like, yeah, okay, you have fun with that, right? Because I barely have enough time to do my rolls on the Friday. I was doing this until what? I don't think I had a chance to like almost 3, but I don't know. You got to make time though. Let's see, Palantir. All right, so again, my cost basis sucks. 185 is my cost basis. What's Palantir at? I mean, look at that. That's embarrassing. 131. Oh wait. Yeah, man. It's a struggle bus here, but hopefully there's going to be a recovery because I'm not averaging down. I'm not adding new synthetics to a May expiration. All right. I'm also probably not starting a new position on Palantir because, I don't need that volatility. I don't need that craziness in my life. I'm not saying it's a bad investment. I'm just saying like things didn't work out my way. So I'm salty. So I'm not, I ain't messing around with you anymore. So Palantir, you were great in the beginning and now you're kind of screwing me, but we'll see how it goes. So what did I do? I got 2 contracts to play with. So I kind of played the game about, I had to go out and date. I went out to 220 and 227. What was this week? There was 2.9. Yeah, that was for the other week, right? So I only made, what, $23 this week? Yeah, I only made $23. Better than last week. It was $11. But now, one expires next week. I try to keep it so I have at least one expiring the following week so I can make some money on these. The good news is I am at house money. So I did pay back my original investment out of pocket on Palantir. However, the bad news is I need to make a lot of money to offset the downside risk, and that is not happening. So I do need a little help from Palantir on some type of recovery because, again, with this strategy, if the stock market if these stocks only go down, it's not good. This is not ideal, right? But that's unfortunately what's been happening on a lot of these, and we've been managing so far. But Palantir may be in the end another loser, sir. But again, we'll find out. It's still early. We have 3 months until expiration. So anyway, if I made $23 on that and I'm risking $10,776, that is a weak ass annualized yield of 11%. Again, Palantir, you suck. All right, whatever. How's my overall position doing? Not good. If I closed it out today, I would lose. Again, this would be a realized loss. The portfolio already reflects it, of course, but it would be a realized loss of 5,635 on the synthetic. But we're not doing that. We're gonna see this through. We're gonna trade options until May 15th, maybe. Let's see how things go. But Palantir so far looks like a failed experiment. All right, now to the good stuff. Let's get to the indexes. So IWM, again, Russell 2000, right? Sounds cool, Russell 2000. All right, so we, as you know, and let's look back. Actually, I meant to do this yesterday. My synthetic was at a 250, and my covered calls were at like 253, 250. I had to roll. What's IWM at? Dog still. What the heck is the dog barking at upstairs? 263 now. So yeah, they did come down, but then I guess it's still okay. I mean, IWM has been a really strong index during, the storm, I'll say, that we've been dealing with. But basically, I have a new synthetic strike of 260. So that's my new cost basis, all right? And that's what I want to sell calls on, 260 or above. So right now, why do I have that visual? That was from last week, right? Yeah. All right, so let's hide this sucker. All right, so this, yeah, I had a, 265. It was expiring yesterday. It looks like we closed around 262. So again, when I did the rolling order, it was very cheap to close, right? So I waited until like 3 p.m., close to 4, right? And I did a rolling order. That way, the buy to close part of the rolling order paid about pennies, less than 10 cents. And then the new position, I decided, because at the time I hit my income goal for the week. I rolled it up in strike. I rolled it to 268. I'm not saying IWM is going to go up that much, but it's leaving some cushion, right? It's 1.72% out of the money. That way, if IWM goes up, the index goes up next week, we have some wiggle room, right, to capture that upside and be able to sell. When we do our rolling order, it'll be a little cheap, cheap to close again. Because ideal, you want to stay kind of equal with the index when you sell the covered calls. You don't want to get blown through. Sometimes, yeah, I'm aggressive and I'll do it at the money or even in the money. But I'm trying to play it good with these indexes. But we'll see. It was a delta of 0.29. So even that, it's above the 0.2 delta. Everyone says that's the safe spot, but we'll see, man. We'll see. Paid me $128. Can't go wrong with that. So $128. How much am I risking? 4,269. That is an annualized yield. Sucker! 5 time of 155%. Can't go wrong, bro. That is just, again, I love my indexes. The RODY play to me, index only, right? Again, need to punch myself in the face for adding all these individual ugly tickers. But it is what it is, lesson learned. All right, so anyway, how much do I need to make per week to pay off the original investment? $34.25. How much did I make this week? $128. So obviously that worked out. As far as like the holdings, the synthetic position, again, this position expires January of 2027. All right, that's next year. So if I closed it out today, though, I would make 2,076, which again, I'm not going to do that, but at least it's worth something, right? Because it is trading slightly above the 260. Okay. All right. Moving on to the other index, the Qs, right? The NASDAQ type ETF here. What do we got going on? We opened this one. We still have the same opening price. 615. 615 is the strike price. The expiration date on this sucker is 12/18/26. So it is in this year, but it's the end of the year. So we'll see how that goes. So again, I got a gray, move these gray suckers out. All right, so what I do this week, I had a 615 strike price. Again, that's the lowest. That's at my cost basis. We closed at 601. I would have liked to have a little better recovery, maybe go back, because again, when I opened that position last week, we're at 602. We actually went down $1. But whatever, man. Obviously, it was very cheap to close it, so we did a rolling order. I kept the 615 because, again, I don't want to sell calls below my cost basis if I don't have to. At the time, it was 605, so I did a 615. Delta was 0.28, and it paid me a very sweet 250. So again, if I made 250 and I'm risking $8,600, I'm yielding 151%. So the index is, again, nothing but good, man. It's been good. Look at how much I make on the Qs every week. Started with 700, then 200, 500, 269, 135. Like, I'm like, yeah, it's been working. Granted, the indexes, haven't really tanked, but that's the point. They don't move like these insane hood tickers or these other tickers. But again, it's just something to think about, guys, when you're getting destroyed. Yeah, we think it's great. We think, let me do double leverage on freaking Robinhood or, this one. And it's like, got to make sure the risk is worth the reward. All right. Anyway, the synthetic on the Qs, it's worth about 4,269. But again, like I said, I'm not closing this. It's worth good money, but we don't need it. We're making bank on the weeklies. All right. Moving on to the Netflix. This is the only zikot I have. It's a zikot because it's a zebra with a covered call, a weekly covered call. All right, so the zebra part is 3 legs, right? And we do 2 long calls and 1 sold call, same expiration date, different strikes. So we bought the 2 longs at 85 and we sold a 105. At the time when we started this, look at the price of Netflix. It was at $93. And I thought to myself, like I always do, wow, that's cheap. And here we are today. Netflix is at $76. So again, literally every individual ticker I choose has gone down. If that's not telling me something, I don't know what is, right? How much reminder do I need to know that I am not the stock picker? Look how much it went down this week. Netflix went down like 6.48%. Like, it's just, does it ever end? It seems like the end is never near. All right, but anyway, wow. Let's move on. What are we doing? Well, again, what's this great thing? Let's get the old stuff out of here. What are we doing here? Anyway, we had a covered call, 86 bucks. It was expiring on yesterday. Obviously, well out of the money. Cost almost nothing to close. But I did a rolling order anyway, and I rolled it to 85, which is now at the long call price. It's at my cost basis for the most part. And I had to go out another week because, again, it's down. We are down, but I made 20 bucks. Not a lot. So this zikot, it's not really working out, to be honest. I made 20 bucks, risking 3,033. That's a 34% yield. But ideally, I want to make $58.99 per week. I'm not making that. So, yeah, I mean, is what it is. All right. What about the holdings? How's the position looking? Well, it's worth 1,490. It's never going to be worth negatives. That's the good part because we did not sell any puts. So that is the plus side. As you can see, max loss, zero. So that's the beauty. So some of you may think, all right, let's look at that. Let's do that because at least the risk is what I pay out front. All right. Anyway, how my hoppers doing? Yeah, I'm not going there. Disaster. All right, Vixen. I'm loving this. I'm loving it. All right. So what do we got going here? We had a covered call on the VIX. We originally purchased a leap on the VIX. The VIX was down to 14. And again, what is the VIX? It's the fear index, right? That's what they call it, the fear index. And you can see this is the inception to date chart, right? And you can see, where is it trading? It's trading at 20-ish. It jumps up to 80. It could jump up to 60, but it never really goes below $10, right? I believe 10 was the lowest. But, you could see that $14 was very, very cheap. So what you do is you buy a leap for 14 at the time. I did. That's what I did. I chose the furthest expiration it allowed me, which was September 16th. And I was waiting. I'm like, okay, this is my downside protection. If the VIX spikes, if the fear index spikes, then I'll sell it and make money. But in the end, I was like, you know what? I can't just wait around because I'm probably not going to make money on this trade. So I'm just going to sell weeklies. And I did. I've been selling weeklies. So you could see I had one expiring this week. And by the way, what strike price? How do I choose the strike price? I paid $8 per share. $8 per share for this freaking 14. All right. So I have to make at least $8 if I get assigned on my cover call. Does that make sense? Right. So 14 plus 8, $22. That's my break even. So I can sell calls at $22 or above. All right. Now that's what I've been doing. So I had a 25 the other week. I had a 25 this week. The issue is, and I actually had to set a reminder on my phone. They expire the morning of Wednesday, not even the night. They expire Wednesday morning. So I have to roll these every Tuesday. So I had a 25 that expired on 2/11, again, the morning. So I had to do on 2/10. And it expired worthless, right? Well, it didn't expire worthless. I rolled it and it was very cheap to roll. And I rolled it down to 24 because, again, I've been looking at the VIX, tracking the VIX now. And every time it really touches this range, it goes back down. So I'm comfortable at the 24. And by the way, it's $2 above my break even. So I'd have a $200 profit if I got assigned. And I'm good with that. If I get assigned, I'm fine. 200 bucks? Yeah, I'll take it. Plus all the premium I made, right? So anyway, how much did I make for trading this? $32. All right, it's $32. So let's go down and see if that's enough money. Well, again, I risked $800. I made 32. That's a 208% annualized yield. In order for this to pay off the original investment, which is just the long call, I need to make $23 per week. So obviously 32 greater than 23. So I'm on the right trend here. So how is trading the VIX? If you ask me, it's doing great. I'm loving it. It's working. So anytime If the VIX drops down to $14, $15 range again, I'm probably going to do another position. I'm going to do another contract because it's working, right? It just works. That's all I can say. It works. It's a hedge, right? It's a hedge because when the market sells off, when the market's fearful, the VIX will go up, and it's possible it'll blow through my covered call. But again, I'll make money, so that's okay. Makes sense? It makes sense to you suckers? Are you guys awake? What's DD saying? Should we start an inverse fund? You know, that's not that 1,000 subscribers. I don't know. I may have changed my mind. I'm kidding. But yeah, I mean, basically, yeah. As far as Hood goes, whew, Hood and Palantir, that. Yeah, Kramer, poor Kramer, man. People bash him all the time, but I just love that he's just insane. You know, granted, yeah, he's out there. He makes strong opinion decisions, but you know, good for him. But people, they only look at the negative, right? They'll always look at like his wrong decisions. But I always appreciate like he's not the normal person you see on these investment channels, these boring ass people. Oh, did the 200-day moving average, and this is the time to get into the stock. If I were him, I would invest in a long-term index and buy But you don't get that out of him. You don't know what you get, right? The fact that they even put him on air is just good because it's just unpredictable, you know. And that's what I like. But I'm not normal, so. But yeah. Anyway, oh my God, we got someone from X typing. Welcome, world, just world. That is a hell of a name. Welcome, world. I'm glad the world is here to watch. All right. So again, I've been tracking the change in the VIX, the IV in the VIX, just to see what it looks like. So what are we doing here? The VIX actually closed at $20. That's a lot. That's high. You can see it's up. So there is fear in the market. People are fearful. Are you fearful? Are you? Maybe, maybe not. The IV is at 114. My option, if I closed it right now, it's worth $8.20. So I would make $20. No, 20 cents. I'm sorry. Capital appreciation if I closed it, but I'm not closing it. So stock price change. Wow. Yeah. The VIX jumped 15.99% in 1 week. Option price change, 5%. Okay. Well, I'll take it. Intrinsic value, extrinsic value. Here's my break even. Yeah, so I'm taking, yeah, so I'm adding up how much I'm making. No, how much, what am I adding up actually? 704. Yeah, I just need to pick this up. Why am I making this so complicated? Yeah, it's just going to be this, because that's the net, divided by 100. Yeah. Break even 704. Because that's, yeah, this is how much out of pocket I am right now. So if I net that against what it's worth, I'm actually up $100, $116. So that's good. That's good. All right. Does that make sense? I love this VIX play. Again, I don't see anyone really talking about trading the VIX like this, but I don't understand why not. It works, but I don't know. Like I said, I'm going to add more. Should the market not be fearful and should it come down to $14, $15, you're not going to see it any lower than that. I mean, the lowest is maybe 10, historically 10. So, but I ain't going to wait till 10. I'll look at 15, I'll look at 14, and then I'll add a leap. All right. How much did I make this week? How much do I need to make this week? How did we do? We made a total of $750. I could zoom in here, I guess. And I used a capital. Capital went up because I did add that SoFi position. I used capital of $40,449. That is a weekly return of 1.85% and an annualized sucker of 96%. Is that good? Yeah, it's all right. But again, the capital's going down. It don't feel that good. You know, it feels, I like making 750 a week, but you know, I want my capital to stay flat or go up, not just down. Like, so, okay, stock market, enough of this. But anyway, I lowered my goals, my monthly, my weeklies, to a more reasonable standard. That way I'm a little less aggressive and I'm risking less money. So you can see now my weekly goal is 510. Obviously, I've been hitting that pretty easily. So the goal is met. And yeah, we'll see. We'll see. But again, the problem is, you know, you can see I lowered it, but this is like just paying off the bills, which is honestly okay. You know, I got to slowly move my way up. I was a little aggressive in the beginning, but we'll talk about that. I didn't even do my month-end update at this point, which is pretty stale. We're halfway through February. I may have to do February and January together. All right, monthly income. Since I didn't do the January update, I might as well tell you, I did make $4,490 in the month of January, using $52,000 at the time, which, you know, it's all right. Here's my the cool breakdown, right? How much I made, 750. So you could see, you know, the breakdown of how much I made. Open 37, SoFi 54, the other SoFi 36, ELF 170, Palantir 23, IWM 128, QQQ 250, NFLX 20, and the VIX helping out $32. Yeah. All right. Anyway, this disaster is not going to be pretty because why? Well, again, this just shows the as-at values, which everything is negative except the indexes. That's the trend. That's what goes on. Again, we're not stock pickers here. Clearly, we are index players. We're options traders that can't predict the market. Double D says Kramer is entertaining. That is for sure. Yes, the world is watching. I am worried, but still buying every time I get paid distributions. The real question is, can we buy lower? Of course. That's all we do. We buy the dip, and then we buy the next dip, and then we buy that dip, and then we buy the next one after that, and then we keep buying the dip until we have no money. All right. Anyway, so how am I doing? Right? How am I doing on these trades? So again, I know this is probably tough to read because I always fast forward through it, but again, this column here, this row here shows how much I spent out of pocket for the trades. This row here, how much I made on covered calls. All right. IWM is negative because remember, I had to pay a pretty penny to close out the covered call that got blown through. But at the same time, I reduced how much I made. I had to pay on the synthetic. So, you know, all in all, it was fine. And then there's the additional here. This is the additional downside risk. Because again, we're not just buying leaps and doing a poor man's covered call. We're buying a call, we're selling a put, and then we're buying a put. So that does leave you some risk, all right? Some downside exposure. So you have to be okay with that if you even attempt this. And then the weekly needed, this is where it calculates how much do you need to pay off, how much do you need to average during this whole term to pay off your original investment. So right now we have two house monies. We got the first SoFi and we got Palantir. And then everyone else is, you know, it's pretty low for the most part. It should be manageable. But then if you look down here, this shows how much you need to make to pay off all of the risk, not just the out of pocket. I'm talking the downside risk. And this is where it gets a little more expensive. But you could see like this SoFi, I went out long term. I went out to June 28th, man. So you could see it's a little cheaper, $29. If I average $29, I'll pay this off. You know, I can make $29 per week sooner than later. I'll say if I double that, I could pay off, then be completely on house money. Right now, the top is on house money. But if this gets the house money, yeah, oh man, I would love to get on house money on any of these down here, then I'll be like, yeah. And you can see like on the Qs on, IWM, it's doable, but we'll see. But as you can see, the as-at values, I'm down. I'm down big time on everyone but the indexes. So, we're down about 28% for the as-at positions, and we are not on target. So I can't really use these numbers. But again, things change rapidly week to week. Some notable dates. We do have earnings coming up at the end of the month for Open. So hopefully that's a savior. It better be. If not, I mean, you can probably just consider Open a goner. Like this thing is going to be, I don't even know. But we have until November. So that's the thing. So I got plenty of time. Now, another key indicator is IWM and the Qs. They do have ex-dividend day coming up in March. I have to keep an eye out for that because I do not want to get assigned early again. That happened to me on IWM. So if my call is at the money, close to the money, in the money, it's going to be gone. People are going to take it because they want that little dividend. It's not a big dividend. It's a little dividend, or it's distribution, I should say. All right. Makes sense, Chico? All right. Anyway, let's see what we got. We got any comments here? We are at the hour. Wow, this takes a while to cover. Does this help? Or are you guys just here out of support? D. Castilli in the house. Good morning. He's an options pro. Go check him out, man. He's doing all these zero DTEs, this, that, and the other thing. He's also in the options Discord channel. And by the way, the ambassador of Quan is going to be doing, he already did 2 interviews on the Discord, but he's going to be doing more. All right. He's going to be recording, he's going to be interviewing several fund managers, not just fund managers. He may reach out to you peeps, interview you guys, but this will be live on the Discord so the community can join. And so the community can actually join via voice and ask questions. That's the idea behind it. So hopefully you guys can attend. If not, if he's able to record it and send it to me, I will post it on my YouTube under the Gold Digger Media umbrella. That's something like a new little thing we got going there. But hopefully you guys enjoy them. He's like the best interviewer I've ever seen. I'm not really an interviewer per se. Because I don't prepare. I'm not a preparer. I just hit record and I just start talking. And then I try to keep it like natural, right? He's like, he knows everything about the person, which is so respectful, by the way. It's like really good for the, makes them feel good right off the bat. But which, again, like I said, just tune in. I got 2 of them. They're already posted on the YouTube. Go check them out. Any questions before we wrap it up? Any questions, D. Castilli? Any questions, Marcus Trader? Any questions, Brother AB? Wolf, Double D is still here. He must be off today. Look at that. Any questions? 3-day weekend, by the way. Market's closed on Monday, right? That sucks. Should we look at earnings? Yeah, let's look at earnings, and then we'll go from there. Earnings calendar. Yeah, it should default to next week. Yeah, nothing going on. Medtronic, Walmart. Walmart's on the Thursday. Baba on the Friday. Yeah, man, nothing. Off till Monday. Nice. I'm off Monday, though. Sorry. But so are the kids, so I'm not really off. All right, guys. As always, this is not financial. Oh, crap. I got to do the wheel. Yeah, not much happened on the wheel, actually. All right, so what the hell did I have going? I had 2 contracts expiring on yesterday. I had a covered call at 19. They closed at 15.93. I had a put at 14. They closed at 15.93. Both cases expired worthless. And to be honest, yesterday, I'm like, crap, I didn't do any trades. So I did a trade on TSLL. I sold a put at $15 just to make some money here. The delta was what, 0.21, and again, $23. How much am I risking? It's all down here now. A lot of scrolling, I know. 1,500, and that paid me 79% annualized yield. So yeah, The call expired worthless. I was going to roll it, but I'm like, you know what? Let's wait till Monday. So right now I have 0 covered and then 100 covered shares. So sorry for the quick wheel summary, but I didn't do much. I just had additional 23 bucks. So, all right. Does that help? Does that help? All right. As always, guys, this is not financial advice. I am not a financial advisor. And this video is for fun and entertainment. So hopefully you had fun. Hopefully you're entertained. If not, I don't know what to tell you. I got to get my ass to the gym, but I did pull up a video and I'll play some RODY music. This is my Coke versus Pepsi video. This is from 6 years ago. Yes, I am an old YouTuber. I've been around a long time. I just wasn't getting any views back then. You can see this video has 51 views from 6 years ago. And yeah, I put some time into these videos and I'm pulling them up. I'm going to give it a view. I'll give it a view and you guys are going to be stuck watching some of it while we play the song. All right. All right. All right. All right. Don't be going anywhere, D. Castilli. We gotta listen to some beats, get pumped, get motivated, and then we're going to get our asses to the gym. All right. So what do we got going here? Let's go. Let's go. Let's go. Background music. Here we go.
Ooh. Yeah. Good morning, friends. R to the O to the D. Retire on dividends, you know me. Cash flow mindset moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. R to the O to the D. Retire on dividends, you know me. Built, not sold, yeah, intentionally. No hype talk, just clarity. If you want that life, say freedom with me. Mid-40s, married man, house stay loud. Raising up boys, turning boys into men. New puppy running, chaos around. Still clocking in, but he plotting the end. Giants fan scars, yeah, he wear that pain. Smiles through the losses like part of the game. Never throw shots, never talks that mess. Builds people up, less results address. Streams every day, never missing a beat. YouTube live X when the mic get heat. Not selling dreams, just showing the math. Wins and drawdowns, full on his path. Spreadsheet brain with a streetwise frame. Plays of discipline, never chasing fame. R to the O to the D. Retire on dividends, you know me. Cash flow mindset moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. Yeah. Options on screen, risk handle precise. Structures built calm, every move got a price. Cover calls roll, protection in place. Time on his side, patience setting the pace. They say slow down, he say stay exact. Same calm tone when the market snap. Runs through mud, just to test that will. Same mindset when the chalk goes still. Sings on the post, crowd laugh, he grin. Go dig a hook, but the lesson still win. Movie quotes fly, wrestling frame. Serious work, but he keep it light, man. R to the O to the D. Retire on dividends, you know me. Cash flow mindset moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. If you want that life, say freedom with me. This was for fun and entertainment purposes. I hope you have fun and were entertained. And if not, I'll do better next time. And if you made it this far.
If you made it this far in the video and you would like to prove it, you gotta say the keyword. You have to say the baby. Anyway, keyword today, sorry, Double D, but I got to make my own based on the video that I'm showing everyone. You got to tell me what's better, Coke or Pepsi. Don't say neither. I know I don't drink soda. Just pick one, Coke or Pepsi. All right, Coke or Pepsi, bro. Pick one. All right, you got to type what you pick in the comments down below after this video post. You could type it on X. You could type it on YouTube. And guess what? If you want to help the channel, hit the like button. You could share the video with your friends. Tell your friends. Tell your friends. They want to learn options. Let's go. Let's go, bro. Let's learn. Let's make some freaking money. Quit sitting on your ass doing nothing, all right? Anyway, I'm out of here. I got to get my ass to the gym. I've been talking now for, 70 minutes. Hopefully I have some energy left, but we shall see, Chico. Anyway, thank you all for watching, and have a good day. Later.